So Ben, in simple terms, what is due diligence?
Due diligence, in simple terms, it is a review of a business to ensure you're happy with investing in that business. An example of this would be if you are buying a house, you go to an estate agent, you see it in the window, but you do not know what the true value of that house is or what the issues are.
I think what it does is the process of due diligence confirms that what you're investing in a business actually stacks up with what you think you're investing. So you know, for example, you're going to write a cheque out for £5 million. What you need to know is the underlying business has that appropriate value.
How does the due diligence process typically work?
So for me, the very first thing is to get down to the target company, have a look around, kick the tires, as they say, and then what is followed up by that is a detailed information request, in part based on what I knew before my visit, and then subsequently questions that have arisen as a result of my visit.
So how long is it expected to take?
Very hard to say. I would say if it goes really well, 4 to 6 weeks. If it goes on for much more than 6 months, then that means you've identified some key considerations that need addressing and might result in heads of terms being adjusted.
Are there any common mistakes to avoid?
Common mistakes I see are that the sellers often have a false expectation of value in terms of what they think their business is worth. Also, sellers are often reluctant to engage professionals, which means that the transaction can take a lot longer because the seller is trying to do everything themselves. And where we are acting for the seller, I always advise the seller to engage other professionals because it will get done quicker and normally they will achieve a better price for their business.
And I think throughout the due diligence process, you need to be honest, even the sellers.
Yes.
And that is a common mistake, that they will try and hide items or even the way that they're trading just so that they can inflate their value.
Yeah.
And that's our job to spot it, really.
And also, we as we've advised our client, if there is something, a skeleton in the cupboard as it were, it will come out in the due diligence process. So it is best that you tell us if we're advising you, and we can manage that and work out how best to get this information out into the process.
So what are the most common issues you see?
I guess when I'm doing acquisition due diligence, you often see conflicting data supplied by the other side. So for example, they might say turnover is X, but then we ask for analysis, we get a different number. I've seen that. I think as well, professionals need to get up and go out and see the target. That's the best piece of due diligence advice I would give anyone.
I'd also add unmaintainable profits to that list. I think that's really important, especially as it usually is the factor for the value of the business.
So if a client was looking to sell their business, how far in advance of them wanting to sell should they come and speak to us?
Could be any period really, but it'd be between 2 to 5 years is probably the best window. Earlier is better. It's just preparation really, to help them in the future.
And is that preparation so you can effectively maximise the value for them?
Correct, yes. It's improving the business performance, because we might identify certain areas that they're not even aware of. Often people will run a business, correctly so, but it may be that it's not in the most commercial manner.
So can you perform due diligence on your own company?
Yes, you can, but you'd be reviewing your own work.
And is that a bad thing?
I think it's always good to get another set of eyes on the current state of affairs. And actually, I think from a third party's view, you want assurance outside of that company, because there's going to be some bias. We can see from our expertise where there's issues and where they lie, and often you won't see those when you're inside the business.
And I think also from the work we do, it's unlikely that we will come across something we haven't seen before, be it Competition and Markets Authority, FCA type stuff, which are unusual, but because of our experience, those are things that we have seen and addressed before and worked with solicitors to address those points.
Yeah, and we have a commercial view on certain areas which might not be identified from inside. And we actually have probably market data as well, especially around remuneration or even costs, certain agreements they might have entered and what they could actually infer for the business.
And what I have seen quite a lot as well as on the buy side is that once a deal is done, the buyer is so enthused, so determined to get the deal over the line that they don't see the wood for the trees. It's our job to point out where the big risks are in these transactions.
Yeah, and I think you do need someone to be on the outside to actually identify whether what they're doing is correct, and even from the buyer's side, whether they're paying the right amount for that business.
Yeah.
What reassurance would you give to someone going through this process?
I think the first thing I would do would be to say, I've been through it before, as my team have. I think what I would love to do is actually introduce them to some of my clients who have been through the process before. Because I think, as you know, we've got clients where we've completed a transaction, but they remain clients of mine, they remain clients of a firm. And there's a particular one I remember that was a torturous process. We had an overseas buyer, which made it slightly more complicated. And they must have phoned up 3 or 4 times a day as we edged towards completion. And on the day of completion, they were in tears because it's an emotional roller coaster. But we have seen all that and we can help them through the process.
I think I'd add that it's a daunting process, but we would be with you throughout that process and make it easier for you.
So Ben, just summarise for us the important parts of the process.
It's not a box-ticking exercise. It protects both the buyer and the seller, and early preparation can reduce risk, cost and stress.
I think I would just add to that we have been through the process before. Most of our clients, this is a once-in-a-lifetime process, and it is life-changing because of the sums of money involved. They need our support and assistance and guidance through the process.